Okay, welcome. Thank you, everyone. So yeah, this is Buy Now, Regulate Later, where we are discussing the buy now, pay later industry. Obviously, the government has just announced its proposals to regulate this sector, which is a long time coming in some people's minds because it was originally hoped to be announced in 2021. And now, so we have Peter Tutton, who is the head of policy at Step Change. We have Ayana Vidal, who is the Director of Public Policy at ClearPay. We have Paddy Green, who is the Head of Money Policy at Which. And we have Samantha Niblett, MP. So, firstly, the government did just recently announce its plans to regulate the buy now, pay later sector. Do we think that this meets the demands of industry and the needs of consumers? Paddy, let's go to you first for the needs of consumers.
Okay, thank you. Afternoon, everyone. For the needs of consumers, yes, I think generally broadly supportive of the direction of travel here. The key elements are in there. Access to the financial ombudsman, Section 75 protection, affordability assessments. So the key elements that we'd expect from a credit agreement are there, so that's very good. Two probably specific issues I'd pick out to start with is the idea that affordability assessment is crucial, to assess whether or not people should be taking out credit is key to this. And there is, ongoing reform of the credit information market. So will that be ready to really deliver the ambitions of the government to do this in 12 months' time? And the other one, very specific one, I don't want to get into too much detail, but we know that parts of the Consumer Credit Act don't really suit this product, and putting things into FCA rules is generally, we can be supportive of that. It shows some flexibility. I think they're planning on disapplying 5 or 6 sort of provisions, but there is one particular one I think from a consumer point of view we'd be a bit anxious about, and that's the stuff about the pre-disclosure information. So it's about the key information for consumers when they're taking out this agreement, because all the research shows they don't really know it's debt. Mm-hmm. And the FCA has made it clear it can't replicate that within its own rule book. So generally, very good idea. Need to get in quickly. It's taken too long. 1 or 2 tweaks, I think.
Samantha, I'm going to turn to you now quickly just to jump off Paddy's point. Do you think consumers do realise they are taking on debt?
In some circumstances, no. I think they are giving themselves an easier way to afford things. Mm-hmm. But we were talking before the show. My background, I used to work for Experian and TransUnion, so I understand it from a credit reference agency perspective. And there are some buy now, pay laters that are on the credit reference on the bureau, and some that are not. And so if you defaulted on one, that wouldn't go against your credit score, and so the implications are quite small. So you might not realise it's debt, whereas others you might, although you won't have defaulted on a huge amount. So no, I think people probably just think it's an easier way to pay for things. Mm-hmm.
Ayana, do you want to feed in on that? Do people realise they're taking on debt?
If I can, because I think it's. I think the two of you have made really good points. What I would do is direct everybody in this room to go onto the ClearPay website right now and look at the big disclaimer, essentially, that's sitting literally front and centre, that says ClearPay is unregulated credit. T's and C's apply, but also a late fee might apply if you miss a payment. Those words are front and centre of all of the communications that we send to customers. Mm-hmm. They're entirely through the checkout process. Yep. All of the materials that merchants put out under our name, they have all of that there. So I think there are always going to be challenges around people understanding all of the different financial services products that are available to them, and I think it's a blessing and a curse for the UK in that we've got a really diverse financial services market. People have options, and that can sometimes make things complex. But I think, at least from a ClearPay perspective, I'm very clear that our customers are given that information up front wherever they encounter us, and I think that that's something that obviously is a standard that we want to see the rest of the industry move towards. I think there's a sort of a broader point that sort of Paddy raised about information and the fact that the Treasury has decided the Consumer Credit Act measures won't apply for buy now, pay later, because actually they've decided that within the Consumer Credit Act, it's basically asking you to present a 24-page contract to a customer before they decide that they want to purchase, a dress through on Marks and Spencer's, for example.
Yeah.
That's not proportionate, and I think there's a danger that actually, and the work's been done on this. Fairer Finance did a really good piece of work on it a couple of years ago, looking at what consumers actually understand when they're being presented with that information, and it's fairly little. And I think one of the key things that we're keen for the FCA to think about when it does start to make these rules is, what do customers actually need to know before they make this purchase? As Samantha said, these are fairly low purchases in the grand scheme of things in terms of the cost. What are the key elements that they need to know, and how can we present that to them and make sure they understand and they're informed before they make a decision, without bombarding them with a bunch of information where they go, no, it doesn't apply to me, click accept, and they don't retain anything. So I think for us, there is a real opportunity now for the decision that the Treasury has made for the FCA to be creative and to understand how it could potentially build something that could not only provide a standard for buy now, pay later, but could also move into wider reform of the Consumer Credit Act as well, if it works well.
Peter, I'm going to turn to you now. Do you think there are enough controls in place with buy now, pay later?
So what we've seen so far with buy now, pay later, and when it started, there was always this: the new payday. It doesn't have that kind of explosive harm that those kind of products did. But what we see with buy now, pay later is we see people who are in financial difficulty using it. So more likely to be in financial difficulty, more likely to be behind on sort of household bills, more likely to be using credit to make ends meet. There's a bad thing about that people use credit as a coping strategy to deal with shocks like the cost of living crisis. And that keeps people out of trouble for a bit, but what it means is the hole gets bigger and bigger and bigger, and eventually when you fall over, it's a very, very hard fall. So buy now, pay later is part of that. It's not the only part of that. There's a general need across the board to look at how credit is being used by people who are vulnerable to financial difficulty and how lenders get better at stopping that. So bringing BNPL into regulation is really important. I guess to Paddy's point, we'll wait and see the detail on how things like the creditworthiness assessments work, and how to do that effectively in the context of this product will be important. Pre-contraction information point is really interesting as well. So the challenge there is in the nature of the product. You've got the checkout, you've got the BNPL, it's very quick. How do you ensure consumers know what they're doing, what the terms are in that framework? Now, that's not just BNPL. We're in a place now where credit sales are digital and they're quick, and consumer regulation is behind that. But they're the sort of controls that the FCA will now need to get right.
So we know that regulation was first suggested in 2021. The regulation that the government's proposed isn't going to be in place until 2026, most likely. Samantha, what does that say about the UK's ability to regulate prominent industries?
What the length of time it takes to get it through?
Between the two, exactly.
Very little happens very quickly through governments. And I think in this case, it's really important to get it right first time if we can. And so, honestly, I think the fact the consultation changes tomorrow, ends tomorrow, doesn't it? And then early next year, some recommendations are being made, aren't they? For legislation.
Yeah, exactly.
And then obviously goes live in 2026. I think that's quite quick, actually.
Okay, fair enough. Do you think that the UK government is prioritising fintech?
Oh my goodness me, are we ever? Yeah, we have got more fintech unicorns than the whole of Europe put together. We heard obviously what Rachel Reeves said in her Mansion House speech about prioritising this. I am a co-chair on the All-Party Parliamentary Group for Fintech for good reason. It is very exciting. This has been an incredible growth area for us and continues to be. And it's the depth and breadth of what fintech covers. And we'll probably, I suspect I might be jumping the gun talking about this, but we can talk about buy now, pay later being something that means somebody maybe might spiral a little bit further, but equally it's filling a gap, and it's inclusive because it's somebody whose washing machine breaks down that hasn't got a credit card to pay for that, has got a way of getting hold of a washing machine, So went off on a slight tangent then, but
No, I think it's a really interesting point, the idea that it can be helpful to consumers as well as the fact that there are risks. So one of the gaps in the regulation that's been proposed by the government is the fact that companies like Amazon are not going to be covered because they're not regulating companies that are offering the buy now, pay later services themselves. Paddy, what do you think about that? You know, Amazon's got a lot of customers in this country, and yeah.
I think honestly, you know, I talked about being broadly supportive of this. I'd say, you know, 90+% of it is right, but I do think that is a particular misstep from the consumer-facing point of view, because one, at the moment, people think it's a regulated product already, because we hear so much about the finance sector being, you know, in this country is, you know, the best regulated, and, you know, we look after our people. So there's that presumption. There's going to be a fanfare, there's lots of noise that the regulation is coming and people are going to presume that these products then are regulated. We'll make noise about it, we're going to celebrate it, it's a good idea. But then the customer experience will be almost identical. So when you get to the checkout, it will be credit card, your buy now, pay later, and in this example, let's say Amazon Pay, whatever they have it. The friction will be the same, the interaction will be the same, and the presumption from the consumer would be that it's regulated. So that, I do think, could potentially lead to some complications down the line. I think it's one area where we think there should be an amendment, particularly on this point. The EU credit directive has taken a different stance. So the reason Treasury have come up with this rule is based on the idea, let's say the small, you know, referred to the mom and pop stores, you know, people, the monthly revolving credit, that, you know, we need that to thrive. That's a very good idea and we support that. But when it gets to a certain threshold of the size of these people, you know, consumers will presume that it's regulated. And I really think that's the one that needs to be the key issue, probably to be revisited.
Would you say that's the biggest gap in the proposals?
I would, yeah.
Okay. So with the government proposing measures that will be applied through the Consumer Credit Act of 1974, be interesting to think about whether a 5-decade-old law can effectively regulate what is a very modern digital product. Peter, I'm going to turn to you first on this one. What do you think?
So, firstly, it's not a 5-decade-old law. It was heavily updated in 2006 and 2010, so it's only bits of it, and the bits that people complain about are about 15 years old now. That's still old. Digital products were there, people were taking credit out online then, but it was there. There are bits of the Consumer Credit Act that definitely need to be amended. So we did a big bit of work a few years ago on the communications that people get when they're in financial difficulty. Some of the language and the formatting which is required by the Consumer Credit Act. And that doesn't help consumers. It's designed as a consumer protection, but it lands as a scary thing that freaks people out and makes them not read further. So the over-prescriptive nature of some bits of the Consumer Credit Act, particularly consumer communications, is much better done in an FCA environment. There's a whole bunch of other bits about the CCA that need to be kept, which are about substantive rights, and also we like the kind of some of the sanction stuff in there. So it's stuff that kind of protects consumers in different ways. There will be a debate when those things go over, and there will be a debate for BNPL about what the FCA actually do in terms of notices and content and so on. And it will be important to get that right. It'll be important for the FCA to get that right. You know, there's a bit here is how do you communicate with consumers, particularly when things have gone wrong, in a way that encourages engagement and signals help, particularly when people are sort of struggling with payments. And that's something that the FCA will have to think about a lot now.
Anna, I'm going to turn to you. What do you think?
Yeah, so I think Peter is definitely the expert on this one. But I think from a fintech perspective, I think it's really interesting. So part of the debate that we've had about buy now, pay later over the years is that buy now, pay later isn't quite a credit card and isn't quite a fixed sum loan. It's somewhere in the middle. And at the moment, the Consumer Credit Act doesn't have a definition that it can sit within. And that's one of the things that firms have been playing back. If you want to regulate the sector, that's fine, but you sort of need to understand the model and then what the benefits and the risks are to then be able to sort of fully regulate in the interest of consumers. So I think, you know, Peter makes a good point that I'd still say if it's the Consumer Credit Act 1974, then it is fairly outdated and was definitely first passed at a time when these things, smartphones, people using that to sort of spend online weren't first anticipated. And I think one of the interesting things is that other markets are obviously looking at reforming their own consumer credit frameworks, not least because of buy now, pay later as well, and the fact that it's a globally growing product. And, you know, we're founded in Australia, so we look quite a lot to Australia as being a market where those developments can help inform what we do over here in the UK.
Yeah.
Interestingly, Australia passed their Buy Now, Pay Later Act, I guess, now this morning. So they've sort of leapfrogged ahead of the UK in terms of building that in. But I think part of the reason they're able to do that is because their framework, the underlying structure, is much more flexible. It's newer. They've actually been able to introduce a definition of Buy Now, Pay Later within consumer credit law, essentially, which is something that we're not going to get to do through this process. So the proposals are good, but we've still got all of these rigid bits that are sort of preventing us from really understanding what innovation is today, what it might be in the future, and giving ourselves the space to be able to regulate well for that.
What was it? I mean, do you think that the legislation or the proposed regulation in Australia, do you think that that's more aligned with what industry wants?
I think it provides. I think it comes back to that point about we have the structures that we have in the UK, and I think between the Treasury and I'm sure what the FCA will do a great job of trying to find a way to bring this product within the regulatory regime in a way that works. And that is obviously anticipation of broader reform of the Consumer Credit Act, which the government has accepted they want to do. And as Peter says, there are a number of very quick wins that we can have, not least around information. I guess looking at those markets more generally, we've got an incredibly complex financial services structure. Theirs is slightly more, not as sophisticated as ours. But what that does mean is they have the flexibility to do things differently. One of the innovations that we know, or one of the recent proposals that the FCA has brought in to sort of move to a more flexible approach is the consumer duty, that principles-based, outcomes-focused approach, which we love. We've supported it. Maybe we say that because we're not quite within the purview yet, but we will do, and we're obviously looking at that now to think about what that looks like as it applies to the ClearPay product. I guess, thinking about the Consumer Credit Act and how that interacts today with the consumer duty, you've got very prescriptive rules, and then you've got principles-based sort of like directives that say, just do the best for the customer and provide them with personalised support or communications. How do you do that when you've got a law that was devised a number of years ago that says you have to write to them in this language at a certain time, and if a full stop isn't in the right place, then the whole thing falls over? I think firms are working through that now. Of course they are, but I think it's difficult for us to understand because they are two regimes that are sort of driving at slightly different, I think, approaches.
There's a thing there, though, that is that the Consumer Credit Act also has some very specific consumer protections and rights that are enforceable that protect consumers. The consumer duty kind of isn't really a tool that an individual consumer can use very well. It's something that operates at the level of the firm or the market. So there are different models of consumer protection going on there. Ideally, what you do is you get a balance. So the consumer duty is filling in the gaps, and it's telling to firms, is your culture right, is your product design right? But then you need the protections for individual consumers, and that includes when they're being taken to court and things like that. So there's a mix of things that need to come together. That doesn't undermine what you've said, that actually there's lots of bits of clash, that clash, and we can unpick that, but we don't need to unpick the bits that don't clash with what you're trying to do.
Paddy, do you want to come in?
Yeah, I was just, well, we've spoken about this. So we slightly disagree.
Violently disagree? No, we're not.
No, we politely disagree on that. You're absolutely right. There are some challenges there with the outcomes-based and the rule prescription. But one of the things is, we want consumers to be protected, but we don't want regulation for regulation's sake. We support innovation, but we also want them to understand what they've got. And there are elements of this act that have been around, and it's the protections that are in place are probably the best understood pieces. So in any review, we want to make sure that we don't lose that, so we get the balance. But on the point of the outcomes and the rules, when the duty came in, it's quite clear, this is outcomes focused, but in certain areas we will have specific rules for certain needs. And obviously when you're talking about credit and debt, we need to be particularly careful. I should also say that, this is a good product, right? It serves most people pretty well. I'm not sure that's come across in some of the stuff we said. It's a cheaper form of credit. It's often free for people. So if they can manage it well, it's really good. So we're talking about, the wider regime. The issue I just want to pick out on is sort of a wider debate about outcomes and rules. So we've supported the duty if it is supervised and enforced appropriately. Yet to see any enforcement action on it yet. And have a general concern that we support the innovation, we support growth and competitiveness wholeheartedly, but parts of industry seem to be sort of picking away at that protection as sort of this this sort of anti-growth narrative, and it's not necessarily the case. I think where consumers are protected appropriately, they will trust things and they will embrace them and they will use them and they will flourish.
Yeah.
The final point I just want to make on this sort of tension between outcomes and rules is that at Mansion House, the Chancellor announced a review of the redress scheme.
Yeah.
And if you read that, it's about mass redress events between the relationship between FOS and the FCA. So I've been doing this job here for a handful of years. Previously, I was at OFT and the CMA, and I've worked around the payment sector for a long time. And we've faced the sector that's consistently said the rule book is too big, it's too long, we need to get rid of it. There's elements of that I absolutely support, but there's duplication and the contradictory, we can move them away. And so we want this outcomes-based approach. But then looking at the views of industry that have been set out in the redress review, they've said quite clearly, the lack of rules isn't helping. We want more rules here. And the industry just needs to, I think sometimes, we're talking about the entire finance industry here, that there is sometimes a lack of consistency, which from our point of view is quite frustrating. Because there's this long side, there's too many rules, we don't want this. But actually, when we're put on the line, we want these rules. So let's be honest with what's being asked.
Do you think there is a gap between rules and enforcement in general in the UK when it comes to financial regulation?
I think I would prefer some enforcement action to be taken faster.
Yeah.
I do get that the FCA has such a wide remit, but also when we come to the consumer duty, so just coming down to the point that one of the principles behind the consumer duty really clearly said this is going to allow us to intervene faster. Well, it's been 18 months, and we've had letters that reflect some issues, Dear CEO letters, but we've had them before. They existed before the duty. So I just think if the idea was to help, intervene faster, we're kind of still waiting. So I would like to, I think, sort of rephrasing the question slightly, what I would like to do is if we are going to move away, we need to be from certain prescriptive rules, we need to be sure that the regime that is in place is working. And I'm not saying it's not working, I'm saying it's not proved yet.
Samantha, I'm going to turn to you now and ask a question. So it's about the fact that the kind of gap, the several years that it's taken for the government to legislate on buy now, pay later. Do you believe that this shows that there's a disconnect between the government and regulatory priorities?
I would say the last few years have been a little bit chaotic.
Is there a reason that you think that?
We weren't. No, I can't think what. But it's one of the things that we've done straight away, seen as getting into power. We've said we know this needs doing. To your point, companies have said we do want the guidelines. And actually that uncertainty, and instability, has been the reason lots of businesses have not been growing here or not choosing to go, because they feel uncomfortable. They don't know, they don't know what's going to change. And so even going back to your earlier point on, do I think the legislation coming in the new year and then implemented the year after is a good or a bad thing? It's a good thing because it allows companies to prepare themselves, because it may affect their customer journeys. It may affect their plans that they've got for 6 months, a year, 3 years, and so. I can't speak for the last lot, but I think we've got our ducks in a row. So yeah.
Well, I like the confidence. So one thing I think would be interesting to talk about is, I don't know if you guys are aware, but Donald Trump just got elected. And one of the things that everyone is talking about in terms of his economic policy is the likelihood of some quite large tariffs, which could have a serious impact on inflation. And obviously, recently we've had the cost of living crisis, we've had serious inflation. I'm going to turn to you, Peter. How what do you think are the consequences for the buy now, pay later industry with, if there is serious inflation next year?
So, I'll take that a little bit broader. So what are the implications for people who are using buy now, pay later products? So we've just had a cost of living crisis and we've just seen that energy prices have gone up a bit. And as yet, there's not the same help for energy prices as there was last year. So we'll see how households get through the winter. But what we saw with that is people really struggling. The number of people coming to us for help was, even after debt advice, didn't have enough money to meet their basic bills, rocketed. So if we see inflation going up, we will see more people unable to pay their rent, unable to pay their council tax, unable to pay their energy bill. And what they will do is they will use products like buy now, pay later, or other products to try and do that. Now, interest-free buy now, pay later is better than a high-cost payday loan, but it still makes people much more vulnerable to debt if that keeps going on. So there's some questions there about how, if inflation lands, if we have another shock to the economy, how will our households able to deal with that? You know, we have shredded safety nets. Wages are still real wages are kind of still low. Households are still recovering from dealing with very high energy rates. There's a kind of borrowed to get through the cost of living crisis.
Yeah.
So the worry there is that it will tip many more people over the edge. So we got something like, a third of people using credit to pay their rent and stuff like that. So you can see that vulnerability could unfold very quickly. What happens if it does? One, well, in terms of lenders are going to have to be on it. They're going to have to be looking to identify financial difficulty really quickly. So a stat that we have that 4 in 10 of the people seeking debt advice from us are in full-time work.
Yep.
Yeah, so it's like they're working, but they can't. But actually, once we've done the debt advice, we find that kind of 1 in 5 of them still are going to struggle to make ends meet, and the rest are okay. And what that tells us is that it's mainly credit debt, because they've been using credit to make ends meet, and that's spiralled, and their lenders haven't quickly enough reached out and given them help, so the problem has got worse and worse. So people are going to have to be on the front foot, not just the lending industry. When we think about where were some of the worst bits of debt collection, it's the government, it's local government and council tax, it's these kind of things, and that's where people are going to struggle. Already we see people who are being sent to bail or passed to bailiffs for council tax collection, more likely to be vulnerable, more likely to have very low incomes and struggling to pay even basic bills. So these will be the consequences. So it's one of the things that we hope that government will do through financial inclusion strategy, but even more through the child poverty task force, is making sure that when these things drop, that in particular the government as a creditor is following good practice in helping people and not making the problem worse.
And Eleanor, perhaps if I can just
Please jump in.
Peter's made a really good point. I guess one of the things that I do want to do is set out, how ClearPay and other responsible buy now, pay later lenders treat customers who are in financial difficulty. So ClearPay is a pay in 4 over 6 weeks product. If I use ClearPay to buy something today, then I pay 25% of the purchase price up front, and then I pay the rest in instalments on a fortnightly basis over 6 weeks. If I miss a payment, the moment I miss a payment, my access to the ClearPay platform is stopped. So I can't spend any more money with ClearPay. And if actually I am struggling financially, we're going to know very quickly. We're probably going to know much more quickly than somebody who is purchasing on a credit card and doing the thing of paying a minimum payment or paying a smaller payment and just keeping that balance rolling over time, incurring more interest and having that accumulate, but not being able to do anything about it. And I find it very interesting when you receive that statement from the bank that says, if you keep on paying off your credit card in the way that you're doing, it will take you 26 years to do it. And you sort of look at that and you think, well, how is that delivering any good outcomes for consumers? So the ClearPay model is very clear that, like, if you miss a payment, then we're not going to allow you to spend any more money until you get yourself back on your feet. And one of the other things that obviously Peter raised is that there is, the enforcement of debt is something that obviously we take very seriously. What we want our customers to do is, if they are experiencing difficulties, to contact us immediately, talk to our customer service team. We can pause payments, we can put breathing space holds on, we can put payment plans in place that are completely geared towards their financial sort of circumstances at the time. We work with Step Change, so we're often referring them to the Step Change team as well, so they can get the support that they need. We don't sell that debt. We don't enforce that debt. We work with a debt collections agency purely on a communication strategy, because we're not regulated, and that's the law. The law says we have to. But that debt, if a customer can't pay us back, then that's fine. It means they don't get to use the product again. But we're definitely not chasing them to make payments that we know they can't make. So I think it's I think Peter makes a really good point, but I want to sort of set the record in terms of the fact that actually these products are designed for consumers to do well on them. They're consumer-centric, and that ultimately people will be struggling or would struggle if there is a spike in interest rates and that impacts on cost of goods and services. I do think that buy now, pay later is genuinely a good product to use if you're having that short-term shock where you just need to spread payments over a short period of time.
Yeah, and thinking about potential economic instability, what do you think of the argument that some people make that the buy now, pay later encourages people to live beyond their means?
So I think what we've seen from our customers and how they use it is that they're incredibly savvy. Our customers are actually the savviest, I think, out there. And that's borne out by our stats. So 95% of payments are made on time, 98% don't incur a late fee. Actually, the UK is one of the best markets that we have for early payers. The 30% of our customers pay early, including me. I love paying back early. So we have an incredibly, and I think there's also this, I guess, this understanding that people who are using it aren't, might not be as financially literate as you might think. But actually, as I said earlier, we've got disclaimers, we've got information on the website that says very clearly this is unregulated credit. Here's what might happen if you miss a payment. Our customers are roughly 37 years old. It skews female. These are women who are running their household budgets anyway. These are the people who are buying clothes for the children, furniture for the home. They're doing the weekly shop. So these people are always and already thinking about money. And I think there are definitely always going to be a few people, that people like Step Change and Which encounter who will struggle more generally with that, but the vast majority of our customers are incredibly resilient and genuinely see this as a tool to help them manage their money across all of the other financial services products that they use.
Yeah. I think it'd be good now to turn to the National Payments Vision, which was announced recently. Samantha, how well do you think that the National Payments Vision aligns with the demands of industry?
I also sit as an officer on the Open Banking and Payments, APPG. Again, it was Experian when the open banking first came in, and the whole payments thing is kind of bonkers. As we've moved into a digital world where we are bombarded, quite frankly, sometimes with ways of paying. We were talking before that if you're trying to buy something through an app on your Apple phone, you're rarely given other options than Apple Pay to pay for it, which means you've got to link your card to Apple Pay, and that's reducing the options that you've got for payments. We've had Visa and MasterCard that have been they've dominated the market. I saw a clip actually of a senator in the States interviewing, I think it was Visa, and they were saying, what's your profit margin? And they were like 55%, something like that. And then they were being accused of basically helping lenders who charge massive APRs to reap in cash. And so when we see like the TrueLayer coming in and sort of disrupting the market, it's quite exciting. It's forcing, I'm not anti-Visa, by the way. I think Charlotte Hogg and the leadership team at the Women is wonderful. But it's making them think on their feet. So, we've got the new regulation around push payments, and digital is driving innovation, and that is exciting. I think the speed with which it's changing is almost overwhelming. I think as a consumer, we know what we're doing, but as a consumer, as I look at the options to pay, even sometimes I'm like, oh my God, what's that new one? But I was talking to the CEO of Revolut, who was talking about that something like 60% of their, this is an open stat, 60% of their fraud is through Facebook Marketplace. And that's not good for my constituents. That's appalling. And I know that some of them will be absolutely ripped off, and Facebook are not responsible for that, you know, and they don't care, and they could be fined if they want to, but it doesn't matter because they're driving advertisers to their website. And so actually, I'm delighted, quite honestly, that this is all under review and being looked at, because it's time.
Just picking up on what you said about Facebook, I know in the election campaign that, Keir Starmer was quite critical of, obviously he didn't say Facebook, but social media companies and their role in, the creation of fraud and scams. How much leeway do you think the government has to kind of step in and regulate social media companies. You know, these are big giants, but they are, you know, many people consider them responsible for a lot of the fraud that consumers face.
You go and then I'll give it
on this one. We've spoken about this before. So at which we've had a long-standing campaign on, obviously. So the APP, what the reimbursement model came from super complaint in 2016-17, way before my time there. And the outcome, you know, the reimbursement model is a good start.
Yeah.
But in terms of the options that are available to government, there are options that are available right now. So I said, we face some criticism, I think, from parts of the banking sector who said it's unfair that, you know, this is all on us, and we can go into detail about why I don't necessarily think that's the case. But what we've always said is that this is part of a process, and ourselves and the banking sector very clearly supported some changes that have gone into the Online Safety Act, and there's things about these fining powers. So there are tools that are potentially available there that really need to be executed. And one of them is, you know, I get that there are resourcing constraints, but Ofcom's pace in getting it up and running is too slow. So that needs, because, you know, we've started this reimbursement model. We're part of the way there, but it is part of several interventions that really need to be done. And there is one that's available. It needs to be enacted. It needs to be acted upon because there are these abilities to really fine these companies. If they, I mean, the breaches are for a variety of things that go way beyond the specific one that we're talking about. But that's a really good start.
Yeah.
You know, industry have asked for it. We'll support them and others in making sure that that is really delivered. On very quickly on the National Payments Vision, we spoke about this, and actually we were in agreement. We both thought it was pretty much okay, which is nice, I think. But one of the focuses on there, you talk about open banking, is again really supporting innovation. But one of the things that really came through is within the Payments Vision. It talked a few times quite clearly, and I heard the minister who was just passing me on the way out the door at an event last week, that the very key role of consumer protection in payments. Yeah. And one of the things is it's so clear, and you know, the Ghana review last year made it very clear that the absence of a clear protection model around open banking has inhibited its growth because consumers don't trust it. So don't, you know, absolutely want innovation here. I really think that there's potential for huge growth in the financial sector, especially around payments. Yeah. But for those of you who may or may not be working in this space, please really look at that consumer protection element, because it is shown when they don't have the protection, they don't trust it and they won't embrace it. Whereas if it is there, they will give it a real go. And things can fly. Yeah. Samantha, do you want to jump in on the kind of, you know, social media regulation, that sort of thing, protection for consumers?
Yeah, as a mother to a 17-year-old daughter, I live in constant minor panic attack that she's buying things on TikTok. And I'm grateful that her generation don't really engage with Facebook. So sort of marketplace, she's less likely to be ripped off buying a fake pair of Uggs or something. But it's always that battle, isn't it? I mean, it's an ongoing battle around the ability to grow and not stifle innovation, and that America, like, fail fast mentality. I was at an event on crypto in Parliament yesterday. What day of the week is it? And Stephen Bartlett was on stage being interviewed, and he was talking about, you know, goes to his office in San Francisco, and it's kind of all great. This is the atmosphere. You know, we fail fast. I have a fail fast team. Elon Musk is great. And then, I'm paraphrasing, but, you know. And then he said he flies back to London, and he can really feel the difference. But, you know, also America has an appalling workers' rights. And, you know, and so it's really hard for us to be bombastic and innovative and whilst protecting the consumer. You know, I realised, way before I joined the Labour Party, I was quite late doing it really, I realised that, I've always been wired this way, because I was really happy when I worked at Experian and I worked in consumer services at Experian, and I did the first deal where you get your credit report as part of a credit card, a Barclaycard. And I remember when we became FCA regulated, it felt great, because do you know what it meant? It meant we had to do the right thing, not just say we were doing the right thing. And that gave me comfort that we were protecting the consumer. We were still doing cool, innovative things, but it's a balancing act. And that's why I'm grateful we've got the regulation, you know, we've got this regulatory office, and so we can try and speed things through that need to be sped through and slow things down that need a proper look at.
Anna, do you think that the, you know, the government is kind of moving fast enough for the payments industry in this country?
I think we, as Paddy said, really glad to see the National Payments Vision because it is long overdue. I think my tenure in the fintech sector more generally, we've seen about 7 or 8 payments reviews over the last few years, and none with any sort of meaningful outcomes coming out of them. So I think it's good to have this now, and I think this strategy is genuinely can take us forward from where we are before. As Samantha said, we're a market that's sort of dominated by cards, but other markets are doing things differently and are improving financial inclusion, for example, by offering other methods of payment and reforming that. I was in India last week, so I will talk about India as an example, but India, for people who don't know, but I think most people in this room will be aware, introduced essentially a sort of a digital ID, a national identity for all of its citizens to enable, and now that is linking them basically to the banking sector, and they're able to pay each other through UPI. So when I was in India and I wanting to pay people, I struggled because we don't have a payment system that can match up with the UPI system that they have over there. So that's really interesting. I think that there's a real challenge for us to think about when these models are being created, how we can make that truly interoperable across international markets. But seeing it in action was really interesting because I've heard so much about it as being like, this is a genuine innovation that is allowing people to pay directly between their bank accounts. And the government has really taken a strong stance and been able to introduce this. And I think, Samantha, I agree with you, we're British, so we don't really like being bombastic. I think we can be bombastic in payments, and I'm hoping that the MPV is the start of some of that.
Could you see any sort of way that Britain could enact something like that, or do you think it would take, a decade?
I mean, apparently we're not talking about digital ID at this, but I think that's a whole separate thing.
A whole nother topic.
Yes, exactly.
We could have a whole nother panel on that. I just wanted to pick on up on something you said at the beginning about, lots of kind of visions and strategies coming out. And I was listening to the former City Minister, Bem Aflami, yesterday, and he was speaking about the Financial Conduct Authority, but he was talking about this death by consultation, the really slow pace of change when it comes to change the rules in the financial services industry. Samantha, what do you think about that? About the pace of change?
I think it depends where you look. Honestly, I think it depends where you look. Some things feel like they're just moving far too slowly. And other things you feel like you can't catch your breath because the rate of innovation is so exciting. And also one thing that's really important, conscious time, but one thing that's really important, I mentioned I'm a mum to a 17-year-old. I was talking to her about money. She started with a Go Henry at about 10. She's now got a Starling account. That's been, when she was born, she had a Halifax account, right, with a book. She said, when she gets money for her birthday, she goes, Mum, can you put that into my account, please? So she gives me the hard cash and she wants it digitally. She goes, this doesn't feel real. My money going down in numbers feels real. It's the other way around for me. So I think we just need to be really mindful that actually the next generation coming through actually are all about digital and money in the way that perhaps as a 45 almost year-old woman, the way my relationship with it and transferring it and sharing payments about it with my friends completely differs to the next generation.
We are running out of time, but thank you very much to all of our lovely panellists for taking the time to come and speak with us. I believe that Fiona Maxwell will be coming on stage soon to tell you about the rest of the day. But yeah, thank you so much.
Thank you.
I have the wonderful job of telling you that it is drinks o'clock. For those of you who are joining us, we've got a happy hour downstairs. I just wanted to say thank you all so much for coming. Thank you to those of you who joined in person, and I know we had a lot of people watching online as well, so thank you to you as well. Also want to say a great thanks to our partners, City of London, ClearPay and ISDA. This wouldn't have been able to happen without you. Also, thank you to our wonderful events team who have put this together and got some really, really great speakers. So much appreciated, and thank you to all the speakers as well who shared some really valuable insights. I personally think it's been a really great day. I hope you have all enjoyed it. And please get a glass of something. It will be downstairs and we would love to chat with you more. So thank you all very much.